Good morning, everybody. Mike and Corey here again today. I know Steve is in flight as we're doing this. Today is December 12th. Today's topics, I'm going to talk about the producer price index inflation report, which came in, they called it a little warm. So that's, but that may be part of the reason the markets are down just a tiny bit. And then a shocking thing, Gen Z shopping at the malls. Oh, I guess that's why I'm not in Gen Z. And then Corey's going to talk about sector analysis since 2009, all the multiple sectors that are out there, and his take on that. So before we get started, this is a financial education presentation. You must do your own due diligence on anything that you hear in this presentation. More disclaimer information can be found on ankerstarwealth.com, and the opinions expressed are mine and Corey's alone. So let me start off.
Mike, what's the age range on those Gen Zers?
Gen Z, I don't know. I have to look it up again. I looked it up once. I know I'm in Gen X. Why don't you pull that up? Pull up the age range by generations.
The last time we went to the mall, it was for my kids, and they bought a little Pokemon pack. There's like a really nice Pokemon store at the mall, and my 4-year-old made a 2,000% return on his investment. He bought a $5 pack, and they got the nice card and sold it for $100.
Wow. Make sure you pay taxes on that. Or did you plug that in, or did you plug that into his Roth? No, I just kidding.
Well, I was like, yeah, I need a 2,000% return, right? Where can I get?
The problem is that sounds like gambling. I know it's not gambling, but when you get that kind of return in those moments, you usually can only do that at the casino. So, and you certainly cannot do it consistently.
Well, we did go back to the well, and
there we go. I know I've seen that where you get someone gives you a lottery ticket for Christmas or whatever, one of those little scratch offs, and you're like, oh, I won $10, and you're like, well, yeah, just go ahead and give me some more lottery tickets. Okay, I lost it. Okay, I'm break even. Okay, today's wholesale price. Yesterday I hit the CPI report, which was in line absolutely as expected, and the markets screamed higher yesterday, hitting all-time highs. Yay, we love that. Today, the wholesale prices, they came in a little bit more than expected. So when they look at the core PPI, taking out food and energy, it met the forecast. So that's good news. But between food and energy, it pushed it up a little bit. So, like yesterday, I mentioned that coffee was at an all-time high, and whatever other parts of food are at all-time highs, or not all-time highs, but are certainly up. So, it's kind of like a mixed news. If it would have come in at 0.2, maybe the market would have even went higher. As Corey said yesterday, I did look up what the market's pricing in for percentage chance of a rate cut next week. As of yesterday, it was 99%, but I don't know if today might take a few percent off, but I still think that's likely to happen. The other piece of news on this was first-time claims for unemployment up to 242,000, so that was a little higher than forecast. That certainly lends to having a rate cut. So, I'd say at this point, obviously the Fed's got to make their decision. They're in a quiet period right now, so they're not saying anything. But next week, there'll probably be a 1/4 point rate cut. And then we'll get into next year where they're going to evaluate how those rate cuts are rolling out through the economy. Thought I'd bring up the markets. Let's see what it's at. You can see the markets are in the red, but just a tiny bit, 0.1, 0.22%, very little. So certainly nothing concerning. And after yesterday's huge gains, this is, whatever. This might have happened anyways, just because not everything goes up every day. So the shocking article to me, did you pull up, find the age range on Gen Z yet?
Oh, let me grab it.
You grab that while I start talking. So Gen Z, and obviously much younger than me, I believe I'm Gen X. Yes, I know I am. But Gen Z wants to shop in person. Gen X, I'll speak for all of Gen X now. I love Amazon. That's why I'm an investor in Amazon. I'd much prefer to shop online on Amazon, have it delivered the next day, day after, know I'm getting a good price. When I go to the malls, which I rarely ever do, I'm always overwhelmed by, it can be crowded, there can be lines, which that's a good thing for the economy. I just don't like all the chaos. And then plus the person in me that always wants to get the best price as a shopper, I just don't feel like I'm going to get that in a mall because I know they have to rent those places, they have to pay someone to sell it, they have to set up these displays. Um, that's my opinion. But Gen Z, who has been online for a lot of their lives, certainly most of their lives, unlike me, um, you know, they want to go back to the mall. What's the age of Gen Z?
We got 12 to 27 year olds.
12 to 27. Now, I'm going to say this. Now, I've seen the prices of auto insurance the last few years, exorbitantly high, up 20% year over year. I've got teen drivers, very, very expensive. My kids, I see those bills come in. Why does Gen Z want to go to the mall? Because they're sick of being stuck at home and not able to drive. That's my opinion. Um, this show will have our opinions. They just want to get out of the house. And I've seen before the percentage of teens that are driving nowadays, which are right in that Gen Z, it's down, a lot from, let's say, 20 or 30 years ago because it's so expensive. And I get that. Um, other things, so like here's a part of this article I thought was good is up and coming spenders in this generation are seeking social connection. And then there's other instant gratification. We can get instant gratification on Amazon or pretty close. But social connection. We're sick of being online all the time. I mean, the social media, if that's your only way of connecting, you just want to see some people face to face. I think it's a good thing that people are getting out to the malls. Hopefully they're getting out and picking up jobs while they're there as well. So Corey, what do you think? You're taking your kids shopping, and I know you're how old? Well, I don't know if we're allowed to say how old. Are you still in Gen Z or are you just out?
No, I'm out, man. I'm millennial.
All right.
Millennial.
So you can't even relate to this. No, I'm just kidding.
Well,
So
I was
good.
thinking you said earlier that when you go to the mall, it's like too stimulating, too crazy, and I think yeah, you grew up without as much online, right? So the
Oh yeah.
online is the novel part, it's the fun part, and for them, the online is probably the boring part, right? And kind of getting out there and mixing it up is the fun part.
Yeah, yeah. When my online in my teen years had a dial tone, you had to dial up and you had to connect. It was very different. Uh,
Yeah,
there used to be things like CompuServe, and I know AOL is still out there, but like CompuServe, you would log in and have to pay by the hour to
yeah.
access the forums. That was very, very different. So I just think it's interesting. Now, we are keep in mind, we are investors. We are seeking to own companies that we're going to do well. And this is why, these are not wealthy people yet, but someday they will be. And so we obviously want to look at buying patterns, where things are going, and invest to be owners accordingly. So with that, Corey, I'll take you to sectors. You could take us back to the 1990s or wherever we're going to go back to.
Yeah, we'll go back before those Gen Zers were spending money here. All right.
Before they were born.
Um, so here, just a really interesting sector return graphic going back to 2009. First, just look at the S&P. You know, what a decade, or what a decade plus. Those returns are amazing. But you can see each year the S&P is never the top performer because it's got to be an average of all the sectors out there. But usually that's why they say, the passive investing or owning the market is okay because you are going to get some participation in those higher performing sectors each year. But let's kind of look at the top performers. Information technology, it's got its off years. We saw some of that in 2022, and but a lot of years it's been very strong. This year, very strong. Look at this year, utilities, the top performing sector, edging out information technology. We don't see that too often. Even well, I mean, I don't know. It gets strong. So utilities do outperform in down years. So every down year, of the S&P. Utilities were pretty high up, and there haven't been very many down years. And then, of course, we get years like this where there's kind of that AI energy boom, and who could have seen that coming? You got down here in the bottom, energy is kind of a take it or leave it sector. Most of the time, a leave it sector, but every once in a while, it's a great hedge against market volatility. Just something to keep in mind. Mike, is there anything that stands out to you sector wise?
Why don't you look at healthcare?
Oh yeah, healthcare. Um, it had been performing really well, but these past few years really weak. So I actually do want to go one step further here. Look at this chart. This shows you a ratio between the healthcare sector and the S&P 500. So you can see as this chart is going up, healthcare is outperforming the S&P 500 during that time. If the chart is flattish, it's performing in line with the S&P 500. If the chart is going down, it is performing well below, or below the S&P 500. Well, look at this. In about, towards the end of 2022, the healthcare sector entered a downtrend against the S&P 500. These stocks have not done well as a sector. There's been a couple winners, but the sector has done really poorly. And then in November, really this fall, late this fall after the election, the healthcare sector fell off a cliff relative to the S&P 500. It's actually trading at its lowest relative level since 2009. What happened the last time healthcare traded at this much of a discount compared to the S&P 500? It dramatically outperformed over that next, short, period of time, year or so. And then, of course, you hit a peak kind of well above that moving average, and then, of course, right back down. So there might be people out there looking at healthcare names that are attractive due to the underperformance. What does that mean for the next year? Time will tell, right? But maybe there's some value there, or maybe it's just a sector that is going to experience underperformance for some time. But really interesting relative to the S&P this past 2 years.
How about this, Corey? This is the absolute positive mindset that's absolutely not true. Maybe it went down because everybody got healthy.
I hope that is the case.
Could that be
Mike,
it?
I will say this.
That is not it. I mean, everybody did not get healthy, but that would be a nice idea.
I hope so. And I will say this. Personally, I would have died twice already if it weren't for some healthcare that I received. So I am thankful for.
We do in the United States. We have a fantastic healthcare, fantastic research, doctors, top notch. If you're going to be ill, really ill, this is the country you want to be in. I think everybody else around the world, or most countries, they're copying us as best they can. So anyways, this is
now
the cutting
cost,
edge.
The cost can be frustrating, but again, I would rather have costs in my life than
yeah. Okay. Thanks everybody. Have a good one. Bye.